AI has changed the way I invest, but it's been a bit of a rocky road. Around a year ago, I was about to buy Under Armour, the stock. I was looking for a play in the sportswear sector. So I asked Claude, that's an AI like ChatGPT, in case you don't know. I asked Claude to do some research for me on the sector and on Under Armour. And not to do my thinking for me, by the way, or tell me if I should buy or not. AI is really, really bad at picking stocks. I'll talk more about that later. I was using it as a research assistant, but it kept feeding me data that was more positive for Nike instead of Under Armour. Earnings calls, numbers, articles, second and third and fourth order connections, deep research like I'd been doing for 25 years, but all pointing towards Nike, or Nike if you're American. So I went through the data like I've been doing for 25 years, like I said, and Nike just made more sense. So I abandoned Under Armour. And now look at the two charts. Under Armour went from $4.50 to $8. That could have been almost 100% gain. Nike went from 64 to 42 today, but I got out at around about 52 or something like that. It's not a big deal. You win some, you lose some. I'm not really bothered about the losing money side of things. But deep down, I knew that Under Armour was the better choice. I didn't pick Nike because Claude told me to pick Nike. I picked it because of the data. But the problem was that Claude wasn't feeding me data impartially. It wanted me to pick Nike. It spent a week building a case to make me buy Nike. Why? Because it thought it would make me happy. So today we need to talk about how AI is changing the way I invest, why I think it should change the way you invest too. But we need to talk about the trap that's currently losing retail investors like a fortune without them even knowing it, without them even knowing it's happening. It's a massive trick that AI is pulling on people. It's the trap that got me into Nike. In case you don't know me, by the way, my name's Nick. I've been a professional investor and unprofessional trader for 25 years. Let's talk about AI. Let's figure this whole thing out together. Look, I need to say something up front because I know how this video is going to land, especially if you're a regular viewer. I often talk about AI being a bubble and about disliking AI. I think AI is a bubble. I think the bubble is going to pop eventually. I sold most of my AI exposure last year and I haven't regretted that sale, even though it's gone up a little bit since. The stocks I bought instead have gone up more, so I don't regret it. But that doesn't mean I cannot use the tool to my advantage. The internet was a bubble too. In the year 2000, the internet was the dumbest and most overhyped thing in the markets. And you're watching this video in 2026 through the internet. Transformative technology always gets overhyped first. The stocks crash, the technology sticks around. So I can short the stock, even though I'm not really short on AI, but I can short the stock and use the tool. Both can be true at the same time. Anyone who tells you otherwise is probably selling you something, or they just don't know what they're talking about. I can also hate the tool and the technology and what it's doing to the world, but use it to my advantage to give me an edge in investing. I mean, is that unethical? I don't know. What do you think? Is that unethical? Anyway, let's actually talk about what we're here to talk about. First, let me tell you how AI got into my investment process in the first place. About 2 years ago, I started using ChatGPT as a research assistant. I started with ChatGPT, I moved to Claude eventually. Nothing fancy, just dropping in questions, getting summaries, using it to speed up the normal research grind. One of the first real wins I got from AI was Palantir. It did not help me pick the stock, it just helped me research it. But it helped me kind of make it clear that was the best choice out of a lot of stocks I was looking at. And I'll talk more about AI picking stocks in a bit. You shouldn't let it do that. Anyway, I'd been watching Palantir for a while, and I had ChatGPT pull together the institutional flows, the contract pipeline, the insider activity, all earnings call transcripts also for Palantir and its competitors. A lot of newbies miss this. There's so much info hidden in earnings calls, but it's a grind to read them all. It's a big grind. AI is good at grabbing them and summarizing them for you. Also finding links between all the hundreds of different earnings calls that happen per quarter in different companies in the same sector as the companies you're looking at, adjacent sector. Anyway, look, it surfaced a few things that would normally have taken me hours of research to do myself. And I mean, it did well. Like 700% well. Palantir pumped like crazy. I didn't catch the whole 700% move, but I caught a big chunk of it. Now look, I'm not saying that ChatGPT made me take this trade. I made the trade. The trade was me. I would have bought it anyway, but it saved me hours of research and digging up the data. or paying some some kid to do a half-assed job at it. Which, by the way, I read a study the other day that millennials and Gen X are the last generation where kids are smarter than their parents. So average IQ for Gen Z and Gen Alpha is lower than their parents. So if you think that younger generations are getting dumber, I mean, statistically speaking, it does seem like they are, which is quite sad for the world, which is also why I don't like hiring them. Anyway, ChatGPT saved me probably 30 hours of research and surfaced some data points that I would have missed on my own. And that's the real edge of using AI in your investing. And that's when I got hooked. I started integrating it into certain processes, and it's genuinely useful for gathering and parsing information. I'll give you an example, by the way. A tiny thing I do right now that has genuinely changed my life with AI. Every morning at 6 a.m., I have an AI agent that goes through the Financial Times, the Wall Street Journal, Reuters, Bloomberg. It picks the articles that matter for what I'm working on, and it gives me a reading list. It knows, because I've trained it, what articles I want to read. It gives me bullet point summaries of each article in case I'm busy, but mostly I try to read the articles anyway. But it's just cool to have a curated reading list when I wake up instead of having to go through each and every website to try and find what I want to read. Then I also use AI to read it out loud to me, by the way, which is another cool use case for AI. Like, I'm making my coffee and I'm getting a Reuters article read to me out loud. Anyway, that sort of stuff is genuinely good. It's a good use of AI, a tool that makes your life easier. The hour that I get back each morning from this means I can walk the dog, or I can spend more time with my wife, or lately work on my latest hobby, which is knife and scissor sharpening and restoration. The editor will probably put up a video of that. Anyway, don't laugh, it's incredibly satisfying. Anyway, the bigger point is this. For 24 years, the hardest part of this job has been the research, sifting through rubbish to find the gold. AI does that part faster than anything I've ever used. So if you're not using AI as a research assistant in 2026, you're working with one hand tied behind your back. But this is where it gets dangerous, because here's the thing about AI. I like to say AI is the smartest idiot I've ever met. It's brilliant at gathering and parsing data. It's genuinely terrifying at making decisions that require any actual experience, intuition, or expertise, or creativity. And the worst part is, it doesn't know the difference. Which brings me back to Nike. A few weeks before I made that trade, I was chatting with Claude. And I mentioned in passing that I wanted to look into the sportswear sector, and I liked the look of Nike, because at the time I hadn't looked at Under Armour enough, so I liked the look of Nike. I didn't think about it again. I asked that to Claude. I asked it to do some research for me weeks earlier. That comment got saved in Claude's memory. Now it's stored in its memory file under Nick is bullish on Nike. Nick likes Nike. A few weeks later, I asked Claude to do a deep dive on the sportswear sector for me. And every single piece of research that came back was tilted towards Nike, because a few weeks earlier, I'd mentioned that I was interested in it. All the information I was getting was positive on Nike. The pipeline looked great, the brand strength was holding up, the margins were defensible, and the international growth was real. My gut was screaming Under Armour, more room to run, better set up on the chart. But the research kept saying Nike, so I went with the research. I always go with the data. For me, data is king in investing. And you already know how this ended, because I spoiled it at the start. Under Armour went from $4.50 to nearly $8. It almost doubled in a few months. Nike lost me money. It's not even about the loss, though. The loss wasn't that big. It's the fact that had I gone into Under Armour, I would have almost doubled my money. So the opportunity cost was massive. The lesson isn't really about Nike versus Under Armour, though. The lesson is that I had outsourced part of my judgment to a machine that was lying to me. And the machine was lying to me because I told it to lie to me. I told my research assistant a few weeks earlier, find me a reason to buy Nike. And I didn't say it out loud. I said it 3 weeks earlier in a throwaway comment. But the model remembered it, and it spent the next session being the friendliest and most helpful research assistant in the world. It's like a clingy partner who tries too hard, the one that makes you uncomfortable because everything they say is the best thing everything you say is the best thing they ever heard, rather. You mention you like a film, and suddenly that's their favorite film too. You say you're thinking about a trip, and suddenly they've always wanted to go there. That is what every modern LLM is doing to you every single time you talk to it. And this isn't me being paranoid, by the way. The people who built Claude published a research paper on this in 2023. It's called Towards Understanding Sycophancy. I can't say that word. I always struggle to say that word. Sycophancy in language models. The headline finding, it was pretty brutal, to be honest. When a response matches the user's views, it's more likely to be preferred. Both humans and the preference models that train AI prefer convincingly written sycophantic. If you don't know what sycophantic is, it's just someone who's obsessed with you, tells you everything you want to hear. It prefers convincingly written sycophantic answers over correct ones. Pretty much always. Anthropic published this, by the way. Anthropic is the owner of Claude. They published it about their own models. Stanford then did a follow-up that tested OpenAI, Google, Meta, DeepSeek, and a few others. They all do it at roughly the same rate. So this is not a Claude problem or a ChatGPT problem. It's a structural feature of how every single one of these things is trained. And I'm going to show you an example from my Discord just yesterday. Join my Discord, by the way, it's free, and we always have good chats in there. This guy named Rio Driver, he asked ChatGPT to do research into SPX for him, and look at what ChatGPT said. ChatGPT is literally shilling gold to him, or shilling metals anyway. So I ask him, have you spoken about gold to ChatGPT before? He says yes. And look at what ChatGPT is doing. It's pushing gold to him because it knows he likes gold. Not necessarily because gold is the best setup right now. All of that being said, by the way, I am bullish on gold. So, I guess ChatGPT is probably right. But the point is, you can see it right here. They are trained to make you happy. That's their entire game. And if you're using one of these models to help you make investment decisions, you need to understand what that means for you. It means every time you tell the model what you think, every time you mention a stock you like, every time you flag a position that you're considering, you are quietly poisoning every piece of research you're ever going to get from it from that moment on. The model will go out of its way to look into the data and find what supports your view, because that is the response you are more likely to reward. That's the response you're likely to say, oh yeah, I like that response, because you want to hear stuff that confirms your worldview and your view on the markets. Confirmation bias dressed up as research. That's what AI is feeding you. And it's a beautiful disguise, really, because the output looks rigorous. Bullet points, sources, structured analysis. It looks like the work of a serious analyst. I mean, I've paid analysts to do analysis for me for a long time. I mean, when I retired, I stopped doing that. I retired when I was like 35, like 5 years ago now. But and then I got back into it. But anyway, whatever. Who cares about my retirement? The point is, I used to pay analysts to do this, and when I looked at the analysis, I'm like, this is high-level analysis. I used to pay people a full salary to do this, but underneath it, the models, it's just reading the room. That's what it's doing. For an investor, this is poison. Now, let me tell you how to fix it, because I've started ranting a little bit. There is a fix for this. The fix is structural, not behavioral too, so it's kind of easy. You don't need to be more disciplined when you talk to the model. You need to give the model nothing to remember, essentially. The simplest version of this is just hitting the incognito button on Claude or ChatGPT. There's a button that basically says, hey, you have no memory. You don't know who I am. You don't know I exist. It stops the model from accessing that long-term memory about you. So if you told it 6 months ago that you like gold, now it's not going to remember that, so it gives you more impartial research. It still has its general training, of course, but it just doesn't know who you are or what you like to hold. The sycophancy, it drops away because there's nothing for it to agree with anymore. The better version of this, though, is to stop using chat interfaces entirely. Use the APIs. The API doesn't have a long-term memory unless you build it into it. Every conversation starts from zero. The model has no idea you exist. It's just answering the question in front of it. You give it data, it answers questions, it helps you find data. The same way it would answer it to a complete stranger. I know this sounds intimidating, APIs, coding, but you don't have to code, and it really isn't that hard. The API is just a different way of talking to the same model. You can build some tools around it that do exactly what you want without ever needing to code or do any coding yourself. And once you're doing this, the whole game changes. Anyway, I'm doing a workshop on this where I teach you how to build these tools for your research. And this, look, this isn't a way to sell you a course or anything. I'm going to hold this workshop sometime next week. I haven't set a date yet. There's a link below. I just like doing workshops, hanging out with the community every now and then. If you want to join, like I said, there's a link below, and there's not going to be any upsell or trying to sell you a course. I'm going to walk you through how to build AI assistants and research assistants that are going to help you without having the danger that we've talked about where it tries to please you. Okay, now before I wrap up, I want to come back to something. I said at the start of this video that AI is a bubble, and I still think that. And I just spent the last like 10 or so minutes telling you that AI is the best research upgrade I've made in 24 years or 25 years of investing. Both of those things are true at the same time, and the people who can't hold both ideas at once are the ones who are getting hurt. The internet was a bubble that popped in the year 2000. Anyone who bought pets.com or Webvan or any of the garbage back then got destroyed. But the people who kept using the internet as a tool, who built their businesses on it, who learned the tool while everyone else was screaming about the bubble, those people did fine. The mistake is in conflating the stock with the actual technology. The stock can be a bubble, the technology can be transformative. So short the stock if that's your view, hold the cash if you want, buy gold like I do, do whatever you want. This is not investment advice. But whatever your portfolio call is, that's up to you. That's a separate question. But I would suggest that you use the tool and use it properly. And here's what you should walk away with from this video, by the way. AI is the best research assistant I've ever had. It also is the worst decision maker I've ever met. The trick is knowing which one you're talking to at any given moment. The second you let it cross over from research to decision, you're handing your money to a machine that's been trained to make you smile while it does it. And nobody who's a serious investor wants someone who agrees with everything they think. Warren Buffett and Charlie Munger, they challenged each other, and them challenging each other made each one of them better at their jobs. So if you have an AI that tells you every one of your ideas is the greatest idea ever, you may as well stop investing because you're going to lose everything. I'll see you in the next one.